In this video we're going to look at one of the most popular technical indicators, Bollinger Bands. Specifically we're going to look at how you can apply Bollinger Bands to your MT4 platform with IBFX. First thing we need to do here is to open up a new chart. So we'll come up to the market watch list and right click on the name of one of the currency pairs. Let's choose Eurodollars. Then we click where it says chart window and a new chart appears. Now we're just going to change the settings here a little bit. We'll turn off the chart shift and we'll right click on the chart to select properties. We'll change the color scheme. Let's make it black on white. Okay. Now in order to apply the Bollinger Bands, there are a couple of ways we can do that. One of them is to come up here to the indicators icon. Click on that. If you've used it recently, it'll be sitting in the top of the list here. If not, come down to the trend group and there you'll find Bollinger Bands. So we click on that. Now we can change some of the settings here. Let's change the color, make them red. Default parameters for Bollinger Bands are 20 periods and 2 deviations. So this is a 20 period simple moving average and 2 standard deviations. Now a standard deviation is a statistical measure of volatility. So really what we're measuring here is the volatility. Okay, so we'll apply this to the chart, and here you can see the Bollinger Bands. Actually, maybe we'll just change these parameters slightly, make it a bit thicker so it's easier to see. So we'll come to this one. Okay, so now you can well and truly see these Bollinger Bands. Now another way to add the Bollinger Bands would have been to come down to the navigator window on the left and open up the indicators folder. And if you scroll down in here you'll see Bollinger Bands. You can either drag and drop that onto the chart or just simply double click on that name, Bollinger Bands, and that will also apply the indicator onto the chart that you've got open. So as you can see, we've got 3 lines here as part of the Bollinger Bands. The line running through the center is the simple moving average, and the upper line and the lower line have been plotted 2 standard deviations either side of the simple moving average. If you want to investigate in detail how the Bollinger Bands are calculated, you come up to the Help button and then go to Help Topics, click on Analytics, Technical Indicators, and then you scroll down till you find Bollinger Bands. And this gives you a detailed explanation of how the Bollinger Bands are calculated. The beauty of the Bollinger Bands is that they automatically adjust to market conditions. As you can see on this 4-hourly chart, the Bollinger Bands expand and contract as the market cycles between periods of high volatility and low volatility. Now there are many ways to use Bollinger Bands, but one of the most common and most popular is to search for these periods of particularly low volatility. This is what Bollinger calls the squeeze. If we go back to a 30-minute chart, we can see that just recently there was a period in time when the bands were particularly narrow. Now this squeeze is also sometimes referred to as the calm before the storm. It's a period in time when the volatility is particularly low, and with volatility cycling between low volatility and high volatility, it's very often the case that a period of particularly low volatility is followed soon after by a period of high volatility. Now the Bollinger Bands themselves won't tell you precisely which way the market's going to break out of one of these squeezes, but you can use other tools to help get an idea. Now although you can visually look at a chart like this and see when the bands have been narrower than at other periods in time, there is an easier way of doing this. We can add another indicator called band width. Now IBFX have added this into the custom indicators list, so if you come across to the navigator window, open up your custom indicators, scroll down a little bit, you'll find Bollinger Bands width. Now if we place that onto the chart, we'll just check our colors, make sure that we can see this when we put it on. Now by putting the Bollinger Band width on here, it does make it easier to see when the bands have been particularly narrow. Let's just make this slightly wider. So you can see this period over towards the right of the chart we had a period here when the band width was particularly narrow. In fact, if we put the crosshairs on this, you'll see that at that point in time the bands were the narrowest that they had been at any point in time previously on the visible chart. So that's giving us an indication that just around the corner there is likely to be a breakout in one direction or the other. And this is what Bollinger calls the squeeze. It's the calm before the storm. Prices are likely to move strongly in one direction or the other. Now you can see very shortly after the squeeze we had this big impulsive move as prices broke out, and that led to another feature on the Bollinger Bands known as the bubble. So you can see here that as prices suddenly broke out from the squeeze, the Bollinger Bands were forced apart from one another as the standard deviations suddenly became so much larger. Now let's move to a 15-minute chart to look at this a little more closely. So here you can see the breakout from the squeeze, prices moving higher, and the Bollinger Band on the opposite side of the price activity has been pushed away from prices. Now when this band starts turning back towards the price action, that's a good indication that perhaps that initial impulsive move is coming to an end. It doesn't necessarily mean that prices are going to reverse and come back down again. It just means that perhaps that initial move there is coming to an end. So if you have been fortunate enough to get on board, once you see this lower Bollinger Band start turning back towards the price action, that's a good indication that perhaps it's time to be tightening up your stops or even taking some profits. Now in this particular instance, prices did subsequently push on a bit higher. We can see over here we've had another very tight squeeze. Prices have broken out. We've had a bit of a bubble. The band that was on the opposite side to the price breakout has now started moving back towards the price action. So there's a good chance that that initial impulsive move there at least it's going to pause for a bit. Now moving to this daily chart, we can see some good examples here of another important concept with the Bollinger Bands, and this is what Bollinger calls walking the bands. Now you can see through this phase here, once prices have pushed up and hit the upper band, they're then sort of contained between the upper band and the moving average, and they walk along the upper band, walk along between the band and the moving average. Now if we slide back in time, we can see another phase through here, walking the bands upwards. That was quite strong through there. The prices rarely came down, or didn't actually come down to the moving average. There was a bearish phase through here, walking the bands, and if we come back a little further we have several bearish phases of walking the bands. Now in Bollinger's book, Bollinger on Bollinger Bands, he says quite emphatically that a tag of the upper band is not a signal to sell, and a tag of the lower band is not a signal to buy. He's very clear about that, and you can see exactly why that is when you look at this chart. Unfortunately, it is a mistake that a lot of newcomers make. They seem to think that you should sell when prices hit the upper band and buy when prices hit the lower band. But as you can see quite clearly, if you were buying every time prices hit the lower band, you'd soon run out of money. Similarly, if you were selling every time prices hit the upper band, that wouldn't do you much good either. So this concept of walking the bands is quite important, and you will see the price action behaving in this way reasonably frequently, so keep an eye out for it. Well, that's just been a very, very brief introduction to Bollinger Bands. It's a very powerful tool. As mentioned earlier on, one of the great things about Bollinger Bands is that they do automatically adjust to market conditions. Well, we hope that's been useful for you. If you have any questions about Bollinger Bands and how to apply them on your charts, please don't hesitate to contact our global trade support team. They're standing by 24 hours a day while ever the market is open, ready to answer your calls and take your emails and help you out in any way that they can.